So let's launch right in. So we're very pleased to have three investors from three different investment groups here this morning. I'll start with Julie. Julie Henley is online, is participating with us through Zoom. Julie, so great to see you. Good morning.
Hi, Judy. Good morning. Good to see everyone.
So
Sorry, I can't be there in person.
Oh, no, that's okay. Julie has two tiny little ones, so totally understand that. And is based out of Santa Barbara with Entrada Ventures, and also Entrada also sponsors one of our keystone programs, which is our angel conference called AngelCon. We're launching Fund 7. If anyone is, actually, I'm going to plug in real quick. Sorry, Julie, I'm going to do a quick
No
plug
worries.
if you are an accredited investor, and if you I can help you with that definition after this event. But if you'd like to participate, it's a $6,000 investment in a fund, and you get to receive training for 6 months to learn how to invest in startups. And then we do a big investment in one startup in the month of June. So if you want to learn more, please come and see me. And Entrada Ventures sponsors that event. So Julie, with us here this morning. Do you want to do a quick intro on Entrada and what, just a quick overview, how long you've been around, and then we'll dig into more specific questions.
Yeah, sure. No, we're Entrada Ventures. We're a seed stage venture fund. We've been around almost 5 years, been investing for about 4.5 years. We invest in B2B software and deep tech, and I like to say the intersection of the two. We typically invest post-product, with a little bit of revenue. Seed, not necessarily pre-seed, usually is kind of our sweet spot. We tend to lead rounds, take board seats, and get really involved with our companies. We have a team of operators, and we just love helping businesses. So it's a super fun job, and we have a great portfolio, and I'm very humble and lucky to be a part of it. And I'm also a Cal Poly grad, so really excited to be here and excited to learn more about the other panelists as well.
Thank you. Thanks for being with us, Julie.
Sure.
So lots of Cal Poly grads this morning. Alexi, so I'll let you introduce real quick your fund, and we'll go from there.
Yeah, sure. Yeah, thanks for having me. Super excited to be here too. Mustang, class of 06 EE. I'm actually a partner of two funds, Santa Clara Ventures and Santa Cruz Ventures. My entry was just doing some free advisory work, and then sort of happenstance fell into building basically an unprecedented venture accelerator at Santa Clara University in the heart of Silicon Valley. And then after sort of proving out that success, we built Santa Clara Ventures by raising from alumni. So I'm a partner of that firm. And then recently I moved to Santa Cruz, lived there full time, and am now building a second fund, no investments to date yet, called Santa Cruz Ventures. And it's really geographic, but encompasses CSU Monterey Bay and UC Santa Cruz.
Okay, great. Thank you for being here this morning.
Yeah. Thanks for having me.
Yeah. And Julie, also a partner in Central Coast Ventures.
Yeah, so Central Coast Ventures came together at the end of 2022, so we're brand new as well. It started as a successor organization to Slow Seeds, which was a group of angel investors, the first one here out of San Luis Obispo. So we have about 30 members. We are pre-seed, seed, and our focus is really companies that are early stage. They have some sort of prototype, a really demonstrable revenue model, at least 2 full-time team members, and located or have a connection to the Central Coast. So that's anywhere from Santa Cruz County down to Santa Barbara County. Maybe they're affiliated with one of the universities, maybe they're headquartered here. And since we are very new, we've been investing for about 7 months, and we made 7 investments so far.
That's super active, actually. That's really great. Well, so right off the bat, I wanted to dig into the investment thesis, because I think that's the number one thing for startup founders to take a close look at, is to understand what is your investment thesis before making all that effort of outreach and trying to connect. So Julie, how you mentioned the parameters of the thesis in the introduction. How closely do you stick to that? And how important it is for our founders to understand the thesis and how rigid or not the framework is before they try to connect and build a relationship with the group?
I think it depends on the group. I mean, the longer I do this, I think there are always exceptions I'm finding, but they're usually rare, right? And I see this across a lot of funds. Landscapes change too. I mean, when consumer advertising took a hammer and there was a bunch of consumer funds, all of a sudden they all were like, hey, I'm software only, so it just, or B2B only, right? So kind of sometimes markets can change in effect thesis where like a fund you did a lot of research on 6 months ago, you might approach and things can change. That doesn't happen that often, but sometimes when you see shifts, like we're seeing a big shift right now, for instance, into AI, right? And so it kind of just depends on what's going on. I think for Entrada, we stay core to our principles. In our first fund, we did 2 investments in consumer, which we don't know well. It's not our sweet spot. I think what we learned was, we don't have the relationships, right, in that space. It's not how we know how to build businesses. And so we just, say no consumer anymore. And that means consumer apps, consumer products, consumer pretty much anything. And then we do, for us, it's more about what we can help with and what our knowledge base is really deep in. And so for us, we have 4 operators who've done a lot in software. We have 3 operators who've done a lot in terms of science stuff and deep tech. So, we stay in those zones because we're just comfortable, we know it, and we just feel like we can add the most value, which inherently will create the best outcomes. So, we get tempted. What's that?
I was going to say,
we get tempted a lot.
That Warren Buffett theory, right? I don't invest in anything I don't understand, but it sounds like you're trying to stay really true to that. It's like you're going to invest in what you have expertise in and what you can add value to. Yeah. Beyond.
Yeah. And, that's totally it. I mean, a good friend of mine is starting a business and he's amazing. Right. And I'm like, wow, you're going to be successful. But he breaks thesis for us in like 2 ways. Right. I mean, it's kind of in sector and in stage. Right. And it's like very good friend of mine. I'm like, I think you're going to be successful. We totally want to do this, but we just won't. I mean, you know what I mean? We just have too many investors that look at our metrics, look at our investment thesis, and it's just, how the world goes. Another one, a few weeks ago, same thing. It was like, okay, well, you break thesis in 2 different ways, valuations too high and sector, right? So, for us, we just kind of stay in our zone. And I think companies understanding that, like sometimes I see a lot of disappointment when I pass on a deal and someone's like, oh my gosh, well, please, please, please. And I'm like, it's not you, I swear. It's just, it's not in our zone. So I like to say some funds are box checkers to some degree. And I think all funds are to some degree. I think the later stage you get, sometimes they box check more in terms of revenue and growth, right? And I think at the earlier stages, there's a lot of, funds that stick to thesis. There are generalists and whatnot, but I think there's some thesis, it seems, to all funds, right? To some degree. So it's kind of how we think about it.
Well, let's go into the other theses here. Alexi, so you're just launching Santa Cruz Ventures. Have you figured out what the thesis is going to be?
Oh yeah.
Yeah.
We spent about 6 months doing a bunch of homework, interviewing lots of people in the area up and down the Monterey coast. Just trying to figure out what people care about. I mean, I figured out there was no institutional venture firm in the area. And my partner Morgan and I just thought it'd be a fantastic opportunity, kind of in the same way we felt there should be a fund around Santa Clara University, right? So we talked to tons of angels in the area, tons of entrepreneurs, trying to understand what their struggles were, and then what their fundraising journey was like. And that led us to, our thesis for Santa Cruz,
which is
planetary health. We're committing at least 50% of capital towards planetary health, which is clean tech and really anything that encompasses just things that are good for humans, right? UCSC is actually an R&D university known for genomics and biotech, right? So we want to make sure that we're encompassing, I think, just a huge part of their value add. It's also sort of been overlooked, I think, typically, because it's over the hill from Silicon Valley. So yeah, in a nutshell, that's that thesis. Santa Clara is obviously investing in only primarily alumni and graduates.
Okay.
Right.
And so with Santa Cruz Ventures, does that include ag tech? Does it include
correct? Yeah.
anything
Clean tech, be ag tech. Obviously autonomous flight, all kinds of things.
So includes environmental.
Yeah. Absolutely. I mean, we're looking at a company called, just talking about roll-feed packaging, right? We haven't done a first close yet, but that's someone out of the Monterey area. And we've discovered that we actually have some overlapping territory, which is great. That's
great. That's really great. Well, that's another thing. So, a rising tide raises all boats. So we encourage, I know our startup founders are often asked, well, I've submitted to this group. Is it okay if I talk to this group too? It's like, yes, of course, because they will feel more comfort if they both think it's a good opportunity. If they both invest, it raises your chances of success.
Yeah, you see a lot of competition for funds that are leading rounds. We're setting the
Right.
terms, taking board seats, right? We're seed stage, average check size like 100K. So we're really following lead terms.
Yeah.
So there's not a lot of competition with us.
Right.
We're tucking in lots of other people.
Like you want to find out who the lead is and jump in if
Yeah, I mean,
if
and
it's
that's
a
part of
good
our due
fit.
diligence
Yeah,
process. I'm sure
yeah.
we'll get into later.
Right. So Julie, what about, so we talked about the thesis as well. You've made 7 investments already. And have you been able to stay true to the thesis throughout the 7? Have they been outliers? And if so, why?
So I would say it's more diverse than we expected. And I think because we are sort of the first fund here out of San Luis Obispo, we've gotten, a ton of really interesting companies come through that we get excited about. And because we have a structure that allows our limited partners to be really involved in the investments, we get to leverage a much broader base of expertise and experience. So, we've had folks that have connections or really deep domain expertise that helps us then go, okay, well, this might be a little different, but we can understand it. So I would say it was more diverse than we expected, and it'll be curious to see what happens in the next year, because we do have a lot of discussions about like how to refine that and whether or not we should stay true to what our initial perceptions were. So I would say it's been really great, because the other thing we've discovered is how many companies are getting going and getting some traction that have kind of bubbled up that we just didn't know about a year ago within this region.
Yeah.
So.
Yeah. So going back to so me, Julie, you've raised a number of funds. So can we talk about Entrada is further along. It's the older of the 3 groups that we have here this morning. How many funds have you set up? What's the average amount that each fund raises? And is there a strategy around that for follow-on investments? So let's dig into the financial priorities for a partner when you're managing a fund. So that, again, that start founders to understand that process and how they fit in. Yeah.
Sure. Yeah. Well, quickly. So we have 2 funds, but I like to kind of think we have almost 3, because fund 1 we did, and then we also subsequently have a lot of SPVs that we raised to support follow-on. So, we're early stage. So we like to think about it as shots on goal. We like to put as much money in really early as we can. We save some reserves for follow-on capitals because signaling is important, but a lot of times, our signaling, at least out of the fund, is relatively small because we want more shots on goal, just because, that's how early stage funds work. We have a lot of high net worth LPs that really enjoy investing alongside of us, not so much usually our first check, but with follow-on capital. So, there's LPs that a lot of times want to follow our winners. So we just had a company last year who did like a really big Series B. We raised, I think, 5 million for that. People that kind of are like, hey, this one's a little bit closer to liquidity, right, than your fund, because it's later stage, a little bit safer. So I want to go put some money there. A lot of funds raise opportunity funds. I think we'll get there. A lot of funds end up doing what we do, right, which is fund plus SPVs, next fund plus SPVs. And at some point, you consolidate those fundraising efforts and have opportunity funds around your winners. We just kind of haven't got there quite yet. Fund 1, we raised 20 million. We did it kind of just to prove thesis, see what we wanted to do. And then we raised more than, I think, about 25 in SPV. So fund 1's really more like 45, 50 in terms of full support across the portfolio and growing. Fund 2, we raised 40 million, same thing. I think that will pan out to be at least 100 million collectively. We're over 100 million at this point under management. So, the way that we think about deploying capital is we like to lead rounds. It's usually at least half the round. So it's a $3 million round. It's 1.5 or 1.6 or whatever that is. And then from there on, we usually have pro rata rights, that sort of thing. And that's when our follow-on SPVs usually kick in. And we raise money to kind of keep our share, but also, give our LPs an opportunity, which they really like.
Right. So once you raise the amount, the core amount you intended to raise for the fund, there is all this additional investment activity that can layer on top through the LPs. It's not it's not a done deal. It's not closed in the dollar amount.
Well, the fund has to close. I mean, there's regulations
fund
around that,
closes,
right? So
right.
usually, yeah, so the fund closes, you have about a year usually. I mean, and some people raise it in less, some people take the year, it depends. We're always thinking about the next fund. So, but beyond that, when there's opportunities, we kind of, give them out to our LPs. Like I said, the higher net worth ones who know investing well, it's been a value add that they really like about Entrada. So a little bit of work for us, but we enjoy it, and it's just a good way for us to also kind of engage about deals and involve really experienced investors with our companies, which we like as well.
Mhm. So what about you, Alexi? So how much has been raised in this first fund for Santa Cruz?
Yeah, so Santa
Okay.
Cruz is at about $1 million. right?
Okay.
Santa Clara, it's 10 million,
Okay.
right? Same target for both, same structure. There's a philanthropic side that from the partners carry that goes back to the university and a few other institutions, I think, that are impactful for the community.
Mhm.
Of Santa Clara, we've made 14 investments. Santa Cruz is not yet,
Yeah.
hoping in September. We have a couple in mind already that we've also been sort of pitching alongside our fundraising activity.
Mhm.
Sorry, other question?
What was no, I think a lot of this is just to let the start founders try to understand what the capacity is of the fund, if there is follow-ons, like
Yeah,
whether
so-
their needs long-term,
Exactly.
and can they. It's about properly selecting those first investors, right? For them to also be doing their due diligence to understand, can this be a long-term relationship? Is it, how much effort am I putting into this? I think I'm trying to encourage like properly defining. It's really hard to start, but having the right investor at the start can be extremely helpful on that journey.
Yeah, absolutely. I mean, it's a big community play, especially for smaller funds. I mean, we definitely saw that around Santa Clara, and we're going to see the same thing for Santa Cruz. And I'm sure you've seen that as well, right? Where you have a lot of individual, accredited individual investors versus like say pension funds or whatnot, really large vehicles where people are individually interested in the outcomes of these companies. And they sort of act like your portfolio services arm in a way, right? They show their network. They want to, provide advice where possible. They form, side vehicles to do follow-on investments as well themselves.
Yeah.
Right. A lot of these angels who partake in these funds just don't have the deal flow.
Right.
So sometimes they just want to be part of a fund so they get more eyes on, more shots on goal, so to speak. Right.
Right. Exactly.
Yeah.
Let's see. So let's jump into actual pitch decks and actually reviewing startups and what you're looking for. So Julie, so the first impression is going to be typically the pitch deck you receive by email, you take a look. What's the first thing you're looking for just to get that initial yes or no going?
So because we're pre-seed, seed, really a demonstration that they understand their market and they're really solving a problem, and that the founders or the team have expertise in that space or around that particular product. So that needs to be really clear in the pitch deck, I think, besides all of the other things that are important in terms of the enthusiasm. But for Central Coast Ventures, by the time the pitch deck is shared with the GPs and the members, there's a champion. So already someone has had review of the deck, some relationship with the team, and then brings that forward. So all of us are constantly looking at decks, and what jumps out at any one of us would be those things I mentioned, and then we'll have a call or meet with the team or find out more information.
Yeah. And by the way, if there are any questions from the audience, feel free to jump in at any time. This is, want this to be as free flow as possible. So Julie, once you've reviewed that deck, you've received the deck by email, you've taken a look, are you also looking for a champion, a referral of a trusted source that is referring the deck to you? Do you take cold emails and do you take those seriously, or do you prefer to have some kind of referral within the network? How does that come about? I imagine it's varied, but there must be kind of a trend.
So it's funny, when we first started, I think there was a lot of debate, right? And let's take every cold email and review it, and let's just be great Samaritans. And then you start a fund and you realize how many you get.
Yeah.
And it's crazy. It's all over the place, right? And so, when we look at our portfolio, pretty much we haven't done a deal that didn't come in via referral, right? We know a founder, we know an investor, we know someone who knows someone. I mean, and for us, a lot of our network is with anyone, right? Makes your world go around. And so referrals to us also give some validity to a deal. And it just having a connection there and being able to dig a little deeper in due diligence is always like really important to us. So generally there is some sort of connection via fund, like I said, investor, friends, something. So unfortunately, we really don't review cold. I mean, every once in a while we'll get something on LinkedIn where someone wrote something really compelling or they're local, right? And they're reaching out and they're like, hey, we're Santa Barbara. We didn't find an in with you. We'd love to connect. I mean, we do sometimes make exceptions. There's been a few times, I'm very passionate, as is my partner Karen, about funding women. They're just underfunded. Stats are still bad, right? So we've had some exceptions where we get something via LinkedIn that's a woman and it's a compelling story. And we're like, you know what? We're going to give this one a second look because we know other people might not be, right? So it's rare. I would say if anyone ever does try cold, be authentic, be genuine, try to write something that creates a connection, and writing it to like 300 funds probably won't get you in. I would probably think about 5 and maybe taking the time to really craft something that you might get eyeballs. Because I can tell when someone's just blanket sent it to like 400 funds. I mean, it's like, sorry, you know what I mean? Like you clearly probably didn't look into us. We're not a great fit, So if someone is on someone's target list, my advice is be really genuine about it, but also I would just hammer your network and try to find a way in.
Right. I mean, I think there's a lot to be said for doing that homework and rather than doing the 300 outreach emails, just really trying to nail it with the right and finding the right referral, the right connection. Yeah. So once you invite founders to meet them in person, can you talk about your process, Julie, with CCV? What happens next?
So again, there's a champion. And so that champion's already shared with the GPs and usually all members get notification because we invite everyone to attend the pitches. So we review the pitch deck, usually the financials and the projections, and any other materials that might be relevant. So we've all looked at that by the time the founder of the team comes to present so that we can have a meaningful dialogue at that moment. So that's really important.
So you prepare before they
so
come
that we
in.
can use their time and our time most effectively.
Yeah. How about you, Alexi, so with the Santa Clara Ventures, so that's, you're looking at student founded companies or alum founded as well?
The accelerator is open to really any and all alumni, students, faculty, staff. Really, when it comes to investing, it's primarily alumni or graduate students.
Right. Why is that? Is it because they tend to be further along? They have more.
Yeah, it's a lot of things, right? I mean, it's just, you see, founders drop out of school and form these massive successful companies, right? But it's just so far and few between.
Yeah.
When the accelerator is also a university program, I think you need to just tread carefully, right? Because the team is shared. Like the same team that runs the accelerator generally runs the fund as well. And we want to be mindful that education is, I think, paramount for what they're trying to achieve. And I think in achieving the best results for our set of LPs as well, we're looking for experienced founders primarily, right? I mean, unless there's something that someone's identified that others just haven't and tells a really, really compelling story, and it's just proves they're just incredibly determined to prove everyone wrong. I mean, there's got to be a lot of reasons, right?
Yeah. And the experienced founder, I mean, so a student startup, if they are savvy enough to bring on board the right co-founder that would bring that expertise or that experience, that's invaluable, right?
Yeah, no, absolutely.
Yeah. Julie, how once there's interest, what's your due diligence process? Can we dig into that a little bit?
Yeah, I mean, for us, we're still investing early enough that it's about the people more than anything. So we really like to get to know the founders. So our process sometimes is a little bit more lengthy, I'd say, than other funds. Typically you meet one partner and then you get to know a few more partners and you present to the entire partner group. From there, if there's interest, it's okay, more breakouts, right? Let's really dig in, review your operating plan. I mean, for us, if we don't just blindly write a term sheet, just saying, yes, like you think you need 3 million, we're like, hey, no, let's dig in. Let's understand, is three the right number? Should be 2, should be 4? What's your hiring, right? What's the option pool? How do we think about that? Are those things appropriate for stage? And do we agree on growth? Is there also a cushion at the end there, right? Because there's a lot of whoopsies and you know what I mean? I didn't think through that. It's a startup. So, we like to kind of sit down, roll up our sleeves, get to know the founders. And for us, it's a real opportunity to see if we can work together. I mean, we view it as a real partnership. So that process for us is also kind of like, hey, do we see, a 5 to 10 year journey with you? And do we like you? And do we want to work with you? I mean, collectively across our portfolio, we just really love all of our founders and they tend to really love each other. And so that's important for us, is just finding that right connection and kind of that, for lack of better words, just chemistry, right? Where it just feels like it's the right fit for our fund. And we have to obviously like the business. For us, we have to see 100x opportunity. That's always what we're gunning for. So when those things all align, in diligence, that's what matters most. If there's other funds involved, we'll talk to them, we'll talk to people. I mean, there's more to it, but I would say that getting to know and relationship, and also kind of seeing if we agree on the paths, right, in terms of how to build a business, or at least generally agree, because we know there's going to be pivots and changes and, all sorts of stuff can happen. So
and when you get to know the founders, I mean, so because I'm a little bit familiar with your process. I mean, you're actually, just to share with the audience, you're spending entire days with the founders in their place of business, just actually with them for that, their entire work day, right?
Yeah, we do it after we invest. So that's the whole thing, is like,
right.
I mean, we want to be the first call, especially when something's going wrong. And that takes a lot of trust, right? So for us too, it's kind of figuring out, even pre-term sheet, is there trust? Do you think, you know what I mean? Like, do we feel like you can open the kimono, you know what I mean, once we invest and really partner? So yeah, we do spend a lot of time for that reason. It's really trying to feel out, is it right here? And VCs, I think, can get a really bad rap. I mean, I was talking about one of our founders yesterday, that she was kind of a hard nut to crack at first, and I was really worried about her. And as I've got to know her, she just had this, she's a third-time founder, she has really jaded perception about funds. And once she kind of gained trust with us, it's like, oh yeah, okay, now she tells us everything, right? And it was just sort of like, she thought she had to kind of have a guard up, right? And we're like, no, you got a lot of our money, we're in this together, like, let's just have fun, right? So, it's just kind of feeling that out more than anything. And I think just, time really is the type of thing that, you need, right, to kind of gain trust and get to know each other.
Yeah. Alexi, does Santa Clara Ventures have a rigid diligence process? Do you work with a legal counsel? Tell us a bit more about.
It's just a little bit. Yeah. No, I mean, there's countless variables, honestly, and there's so many other things that also come into effect in how many variables you can take in, right? I mean, we're early stage fund, seed stage, maybe small A, financials, everything just looks like a hockey stick.
Yeah.
So, that's always not a surprise. But no, I mean, you're looking for energy, you're trying to gauge how determined they are. You're trying to gauge whether they have really great product experience, I think, whether they built products before. I think oftentimes you see people build great companies because they've seen a market that's evolving sort of prior than anyone else, right? Something that's changed in what they're passionate about that others just haven't quite seen yet, right? And can describe that very quickly and accurately, and be compelling with it, right? You're looking for that classic founder, CEO presence, but can really, really sell. The selling founder is invaluable, right? For sure. Because I mean, at the early stage, I mean, you are your own sales guy, right? You have to be able to sell your idea. You have to be open to meeting people, connecting with people, finding your initial set of customers, be okay with risk, of course. I have to gauge all these things.
I feel that when you start seeing the magic happen, so it happens once every 5 years, and you'll see someone, you're like, oh my God. And I think that, I mean, what I try to see patterns, right? Patterns of personalities, and the engineer who has the sales, it's really rare. I mean, it doesn't often combine. When you get both in one, I mean, it seems like that's when the magic really happens, with all the other elements, of course, but there seems to be a common.
I have a question on sales, because I think like sales to customers is one thing, but selling to investors is kind of another thing. So,
You know,
yeah, you're-
everything in life is sales,
So, yeah.
right? Everything's
So-
dating at the end of the day, right?
Self-investment.
So I'm gonna repeat the question in the mic just to be sure, but Adam from Trick Robotics is asking, how do you sell to investors? Like, is there a methodology?
I think it's hard to sell to investors, right? People who are able to become VCs and typically have some sort of experience and really good instinct around sniffing out what's genuine and not genuine. I think the best way is just to be yourself and just show just the best form of it by being really energetic, really passionate. I think the biggest mistake founders make is maybe not practicing the pitch enough, I think, and they get nervous, they fumble, they forget certain things just in the moment of just being anxious. Practice makes perfect, I think, and less of selling, more just being comfortable in your own shoes and being confident that what you're building matters and that it's going to change people's lives and that everyone should be lucky to be part of it. Right. And be able to describe that really concisely.
Yeah, especially if you're investing in very mission-driven type companies. So if you have to feel that commitment to that mission from the founder, right? Yeah. Jill, you're gonna ask them.
I was just gonna add that it's conveying all the same things in terms of selling to a customer, but understanding the stage of that fund and what that next milestone is. So looking beyond just this particular round, but what your next round is and what the round after that is, so that as early stage investors, we can understand what to expect as far as the imagined at the moment, either exit or at least where there might be potential add-ons, or what that next stage is in terms of the milestones that need to be met and the amount of money that would be raised at that time. And I think sometimes founders, especially early on, that's a really hard thing to figure out. And sometimes it doesn't occur to them to really think through that several year strategy on fundraising. So when people come to us and they have a good idea about what those steps are, it adds a lot of comfort and demonstrates that they have really thought about their plan.
Well, because at the end of the day, the investor wants an ROI, right? So you have to be able to tell that journey is here's how I'm going to get you to your ROI.
Yeah,
It's you're trying to meet that need. The need's the ROI, right?
Yeah. So I would say that's probably a key element, is not necessarily that you're presenting that to the fund, but really understanding. So as you get into due diligence, that's why those milestones are so important, and really kind of having a good sense of your growth and the path and what resources are needed for that.
Yeah. One thing I wanted to touch on, Julie, is so we definitely saw a slowdown in the last 18 months in investment activity, maybe more specifically in the last 12, but the markets have warmed up in the last 3 weeks. Can you tell us a little bit how the last 18 months has affected the investments the fund has made, or the Entrada has made? Has there been a slowdown for you as well over the last 12 months? Are you seeing things peaking back up? What's your experience on that?
We saw valuations change, right? We saw people react. I think some of our companies raising money have had some challenges, right? Where, what was a Series A, 12 months ago or less than 12 months ago at times was, like $1 million ARR. Now all of a sudden funds went 2 or 3 million, right? What was a Series B at 10 million, or was 5 million is now 10 million. So, I think the last point about thinking about your next milestones was a great one. When you're raising money, also think about the what ifs. Like, if the market's saying 1 million, we love seeing plans for Series A of like, I want to get to 2 or 3 and then raise. It's like, cool, because you can't predict markets, right? You always kind of want to overshoot where the next round is and think about that next milestone. So for us, our portfolio has actually been pretty okay. We talk people down in valuation. We tend to not overpay when stuff got really crazy. If the valuation was too high, we passed. I don't think it affected Entrada in terms of the amount of deals or clips we did. I mean, for us, sometimes we'll do 3 at once. Sometimes a few months will go by and we're like, what's going on? And we're just like, we've done this long enough. We know there's more deals. So for us, it's just finding the right stuff that's the right fit at the right time. I don't think it necessarily affected our ability to invest or interest in it. I mean, we're always really active and ready to write checks. So, I think we've had some founders thank us for talking them down on valuation a year ago or 2 years ago, when stuff was a little bit crazy, And for us, it was sort of like, hey, we've done this before. And, we saw it when it was nutty. We're like, this is going to correct. You know what I mean? I've lived through 2000, 2008. I've seen it all. Right. So, yeah, I think, it's a bad joke, but sometimes it pays to be on the older side of funding. Right. And so, all this stuff's cyclical. So I think for us, we're just careful. We're cautious. For us, getting the highest valuation, I tell founders this all the time, isn't the best thing. The best thing you can do is make sure you're building your company in a sustainable way. And ideally you're getting less dilution right as you grow. And one caution I give, the comment I thought about how to pitch investors is don't be hyper worried about dilution, right? I mean, that's going to scare investors away, right? You want to be generous about your team. You want to be generous with your investors, right? I mean, you kind of want to come at it as like, it's a team approach. So anyway, that's just stuff that we're seeing in the market, probably over talked, but
Oh, no,
yeah,
no,
so it doesn't
that's
affect
great. I mean,
us
it's nice
too
to know
much,
that-
but
No, it's great. The activity didn't necessarily slow down, but you did see that valuation correction that was needed. So, no, that's great.
Mhm.
What about, I mean, obviously for Central Coast Ventures, you guys have actually been super active. So the market didn't really affect the outlook.
No, I mean, from the investor standpoint, what is interesting is we have one company that we invested in that was essentially doing a bridge round because of the landscape and the economics of trying to raise their Series B. It just, the timing wasn't good. And so from our fund standpoint, there maybe were some opportunities that we wouldn't have otherwise had as this really small early stage fund.
So you actually saw it as an opportunity rather than a time to be cautious.
Yeah. So, and again, we're so new, we were just jumping into it. And I think like a lot of funds, folks are ready to invest. And so all of the other things going on in the market really didn't impact that.
Right. There's that excitement to just get going and start. Yeah. Have you seen any impacts with your activity, Alexi, at all? Or
Yeah, I mean, venture capital is a brutal game, right? The startup world's really, really brutal. You can have this sort of like ramping on risk that can last 10 years, and then just within 6 months, it's all gone, right? And then you see people who are like really mature funds who are just taking a bath, right? Because if everyone raising flat rounds or down rounds, or can't raise it all, right? Conversely, I think if you're investing now or recently in general, I think there's a lot of great deals out there from an investor's perspective, right? I hate to say that, but at the same time, we have a job to do as well to fulfill, to fulfill some of our LPs commitments and
but
do
that's
our best job,
that I keep trying to get back to. When Adam asked this question, it's like at the end of the day, it's founders have to understand your interest. Like you've got a goal to accomplish too, and it is that ROI, no matter what. It is what it is. Yeah.
It's a delicate line to walk, right?
Yeah.
I mean, we obviously have our founders' backs at all times,
right?
And that you want them, to call you or call their investors in general and be comfortable with that relationship because it is a partnership, right?
Yeah.
I mean, typical life of a fund, a vanilla fund might be 10 years.
Yeah.
Right. So your relationship with your investors, your relationship with your set of entrepreneurs you invest in is 10 years, right?
Yeah.
Most marriages don't last 10 years.
Yeah.
So you're attached to the hip even longer.
Yeah.
Yeah.
So let's talk, I'm sure when the burning question, any recent wins, any exits that you can share with us, Julie, any success stories that we can talk about and share with the audience today?
We're early. I mean, we've had a few acquisitions, but they haven't been big marquee wins for us. So we've been able to return some capital to LPs. We've actually been able to recycle some funds and put them into other companies. I mean, funds, if you raise a certain amount, I think you can recycle. It's up to 10% of earnings you get back before you start giving back to your LPs. So we've had some wins that have actually enabled us, at least in Fund 1, to go invest in some more companies. Fund 2, we're still investing out of. So it's all pretty new. We had a company last year raise a really big $45 million Series B with PSG. They're mixed mode out of Santa Barbara. That for us was a huge win. We've got a company right now that's in term sheet I don't want to talk about. That's a great round. We've got a company, Coreshell, that's been doing really well. It's up in the Bay Area. So we've got some companies that we're really excited about that are building momentum. But, like I said, we're kind of going for 100x. So that, considering that we started investing about 4 years ago, we're just not there yet. Our time horizon's probably at least 10 years. So
it's a 7-year average at best. And as Alexi said, more likely 10. Yeah, so it's another.
Yeah, I mean, it takes a while. So, I mean, one of our CEOs who, she exited last year. I mean, we were having drinks recently and she's like, I'm so sorry. I know you wanted me to go further and get bigger. And we were like, whatever, it was life-changing for you and it was the right decision. And you know what I mean? It's like, it wasn't a write-off and we got some money, we supported it, right? But that's better than a zero. But a lot of them, we're kind of still watching them trend and track and really helping to make sure they're managing capital so they can just get to the next round. But by and large, we're really happy with the portfolio. So
that's great. So very early stage still for CCV. Are there any specific investments that you can talk about, Julie, that you're excited about, or companies that you're just really excited that you were able to fund because of their mission or the concept or product or service?
Yeah. Again, it's been more diverse than I think we sort of expected. So we have a couple software companies, one of which is Tally4 that won AngelCon a couple years ago, and they have a unique software solution for small to medium accounting firms to take what is a manual process of a couple hours into an automated software process. So again, not the most sexy industry per se, but we're really excited about where they're at and the founders. So that's a fun one on the software side. And then we have a couple companies that are doing some interesting things on the sustainability side in terms of creating new solutions to reduce plastic and waste, which of course there are many, many companies out there, but some really unique ways that they're using those products and getting them into market that we feel like will be successful. So I'd say on the software side and the sustainability side, out of the 7 companies, there's some exciting things happening.
That's great.
Yeah.
And what about you, Alexia? Are there companies that you've invested in through either, the one fund or ones that you're looking at right now with a new fund that you're excited about?
Yeah, definitely. I mean, knock on wood, no down rounds, a couple flat rounds. We've had one NFT company. We only invested in one NFT company. They cratered though. They cratered pretty hard. So that was tough. But most of the companies are going to either be flat or crater. That's how venture capital is, right? But no, everyone's doing pretty well. We had one company that was just a true venture bet. It's been catching a lot of press in just about every single news outlet around the world.
What are they doing?
They're basically building the first vehicle that transitions to flight.
Wow.
Right. So you're driving and you can transition to flight. Right.
Oh my gosh.
So they've gotten a ton of press. They're backed by Draper. And we're a proud investor and we're supporting them and did ton of due diligence. It's one of those just really, really big moonshot bets.
It is a big one.
So he's doing well, actually. We weren't sure for a while.
That's exciting. Those are the type of stories that are really fun to talk about, though. I mean, because that's definitely the incredibly innovative. That's it's been in a dream concept, sci-fi movie concept, and now we're actually seeing the reality of
to the Jetsons, basically. That's what he likens it to. That's a fun one.
So what about trends? Julie, you mentioned AI, obviously. Can you talk about examples of things that you have invested in that are focused on AI and what problems are they solving? Are you able to talk about that? So I'm just interested in this is kind of an open question around what are the trends that we're seeing and things that you hadn't seen maybe 18 months ago.
Well, obviously AI is all the rage. We've been investing in it for a while now. We've got 5 AI companies that kind of run the stack from down to lasers and chips up to like software, and all those predated ChatGPT. Obviously the ChatGPT stuff created a lot of buzz, a lot of hype. Everyone's kind of figuring out what to do with it, what to integrate. Now there's lots of competitors and all sorts of stuff going on. We all knew this was coming. I think the thing that we knew it's really hard to process and expensive to process, right? Like all the AI stuff. So we've been kind of getting ahead of it in the sense of forward thinking. And our team, we did a panel on this back in May with our LPs, and Greg Fish, he spoke on it, who's our kind of chief scientist. And so we've been looking at it, just kind of thinking about, well, how are we going to deal with this and process everything and keep up? So that's a lot of what at least Entrada has been focused on. But, on the software side of things, we're making sure that all of our software companies understand it and are thoughtfully thinking about how do you leverage in ways that make sense for you, right? Don't do it in ways just to impress investors, but also when you get a question around it, certainly you have to be able to speak to it, understand it. How does it fit into your roadmap or not, and why? So, all of our companies to some degree, though, leverage AI, I would say, at least, on the software side of things. And, are thinking about it in the roadmap, but we're also cautioning people not to get too into the hype where it's like an overdue or overbuild in a way that it doesn't make sense for the business.
Yeah, that makes sense. Any trends from your perspective that that you want to share or talk about?
I think being right here on the Central Coast and being a major farming capital of the world, really, from Santa Cruz County all the way down south and Central Valley, I think the developments in ag tech in particular are really exciting. And I think for us as a local venture fund to have Cal Poly here and to have the programs through Cal Poly focused on ag tech is really exciting. And that is a really big range. It could be everything from robotics to AI and farm management to new farming solutions. There's a company in Paso Robles who is doing, indoor farming. So it's pretty diverse, but it's very exciting. So I think that is a big trend. And then one company that we've invested in actually, which is not ag tech, it's a consumer software company, but essentially they have a soup to nuts solution for small to medium farms to sell directly to consumers and restaurants. And so again, in that food space and ag space, solutions for all sizes of farming, from the corporate down to like those small to medium farms. So
No, that's great. Yeah. Alexi, what trends are you seeing out of Santa Clara and in your
Yeah, I
region?
mean, Santa Clara, it's generalist, right? We don't focus on industry. I'd say the most interesting activity I've noticed would be actually, again, along the coastal region, right? We overlap with a lot of ag tech that's happening in the sort of Salinas, Monterey area. It turns out for, eVTOL and for sort of drone technology, the Santa Cruz, Monterey Bay coast has turned out to be a big mecca, which is very interesting, as well as, people sort of redesigning, air traffic control units, right, which haven't seen a whole lot of innovation, probably a couple decades. So a lot happening there as more and more just becomes automated, right? That's not a new trend, but as you see, sort of, AI, LLMs, they're all getting smarter and they're able to do a lot more, and they're actually becoming smarter exponentially. So you sort of wonder where this is all heading. Not trying to add to the hysteria, but it's interesting to think about. You see people leaning into it very heavily as sort of robotics sort of mixes with, AI, with ag tech, with lots of overlapping different industries. You see lots of interesting ideas come out of that.
No, and to be fair, I mean, all these new technologies, I mean, this is a whole other debate. This is but it brings up ethical considerations and philosophical considerations around that, for sure. How to control the use, if it needs to be controlled in any way, shape, or form, right? That's a big conversation.
Super important topic. You got a lot of factions, different sort of schools of thought around how to handle it, how to govern it, or how to not govern it, right? You've got things like OpenAI, trying to give it to the masses.
It's kind of the Wild West of software right now, right? In a way, because it's not controlled, it's not regulated at this point in time.
And again, multiple schools of thought on that, whether it's too much power in the public's hands, or because the problem is if you privatize it, then I think it gives too few people too much power at the same time. So how do you find that delicate balance? I don't know the answers, but you definitely see a lot of interesting ideas and creativity coming from the area that I live in, for sure.
Great. Questions? Yes, from the audience, please. And should I throw the mic, or I can repeat the question? Let's throw it. Just.
Have you guys invested in any blockchain technology as well, or has that died out completely? Has AI taken over that? Because like blockchain technology can also be implemented in agriculture stuff and everything. So I was just curious if you guys are having anything to do with that still.
Blockchain. Buzzword.
For us, no, in our 7 investments we have not.
First of all, blockchain is incredible technology, right? It should not be conflated with cryptocurrency, however, right? Those are very different things. I think too often get conflated and create confusion and cause people to go and buy lots of things they probably shouldn't. But have we made any big investments? No, we have not. That's not just simply because we haven't found the right opportunity, but I think there's a tremendous amount of opportunity in that space for sure, right? It's very creative, it's very innovative.
I think that's a good comment, though, to differentiate for founders between all of the hype and, people make those dotted lines to crypto and everything else. So I think if those products exist, it's really important to explain what the blockchain is being used for and why it's different and what the technology itself is.
Right, right. And back to Julie's point, if it makes sense as part of the business model, great. If it's actually adding value more than just talking about it or using it just to try and connect or with investors. Yeah. Any other questions in the audience? Do we have questions online? No? Okay. Oh, yeah. Okay. Okay, one question in the audience.
How diverse is the gamut of investments that you guys make? I know you guys said like you're looking for 100x investment, but you also might be looking for investments in something that has a strong mission statement or might have bigger impact but less overall return. What's the sort of range of things that you guys invest in?
I'm going to comment that the 100x, I think, point, when people like in venture say 100x, what they mean is they're just looking at really, really big markets. And I want to make sure I differentiate that with what a good business is, right? There are so many amazing businesses that people have come to me about asking for investment. And it's so hard to have to describe to them that the outcomes just simply aren't there for what typical investment in venture capital means, right? I want to make sure that's clear because I think some of this is like educational for people.
Yeah, absolutely.
Around
Yeah,
here.
yeah.
Because that's one of the biggest, I think, confusion points where people go, well, I've got revenue and got all these customers. Why wouldn't you invest in me?
Right,
It's
right.
like, well, there's only different types of investors. Venture is a very big bet. The
Mhm.
expectation that most of the fund will probably die, right?
Yeah, yeah.
So I want to make sure I address that comment so that that's clear to people in the audience. As far as diversity goes, I can't speak for any other funds, but Santa Clara doesn't have a thesis outside of just investing in its own community. Santa Cruz has its thesis, has not started investing yet, but I'm pretty sure I can speak for the funds in that they probably do not invest in competitive portfolio companies, right? That's, I think, a no-brainer. So I want to make sure that's also clear. So if someone ever tells you, and sort of in that same vein, if you're doing homework around a prospective investor and you see that they've invested in a company that's competitor, probably should save your time.
Yeah, that's
Right.
great advice, actually. It's all about also teaching our startup founders to do their diligence as well and not waste their time. Yeah. Adam, you had a question.
Aligned with what you're saying. Has the sentiment changed at all around just these total moonshots that probably won't see revenue in the near future, but can get a lot of users maybe, and then blow up and become like the next Uber? That was like the sentiment for a while in Silicon Valley. But now I feel like the sentiment has changed a bit towards bringing in some revenue, getting that kind of like cash flow and like profitability. So is there a change in sentiment? And then has that changed the hockey stick so that you're maybe targeting a lower number, but more reliably? Awesome.
No, please. Yeah. I just want to make sure you have the
So,
mic.
everyone knows about WeWork, right? Adam Millman, right?
yeah.
Everyone could not wait to invest in him. He's one of the best sales, founders possibly of all time, right? And that's a unanimous sort of opinion by many very well-known venture capitalists. Despite what the outcome ended up being, right? People would still invest in him today. And I think the word is he's actually starting another company and people can't wait to put their money in his hands. The best founders will always find capital, right? He's proven to be successful regardless of the ultimate sort of demise of WeWork, so to speak. Lots of things could have changed along the way that arguably could have saved the company. But he's a fantastic founder and fantastic founders will always find capital. So I don't know if investor sentiment has changed a ton. People are a little bit more conservative, I think, and aren't as leery to buy into hype. But again, if you have conviction, you can accurately describe a market that's changing that I think other people haven't quite put their finger on quite yet, and you've got a solid team that's very passionate about building it and is dedicated, I mean, I think that's a winning combination in general, but
But I think the size of the market is always going to be really important.
yes,
So,
that too, yes.
you know, that is a key element. So.
Right, back to the question that we had, the market just has to
Mhm.
be there.
Yeah.
Yeah, the opportunity. Yeah. Okay, well, we do have a question online. What would you say the main things founders should be looking for in a VC to make sure they are the right partner for them? Julie, I think you touched on that already a little bit. Do you want to sort of reiterate the highlights around that?
Yeah, I mean, not all investors are created equal. We coach our companies on this all the time, right? So there's different size firms. There's different partners in different firms, right? If it's a larger firm, find the right partner. And then, the other thing that we always advise for our founders, due diligence on the funds, right? Talk to the founders that worked with them and figure out, were they helpful, were they not, were they disruptive, did they show up? And, we tell people all the time too, if you have a bad gut feel about the partner, about the fund, about whatever, there's more money out there, right? So I think, in all things with founders, always trust your gut instincts and know that when someone invests, especially when it's early, you're going to be with them for a very long time. So pick wisely, get to know them. I mean, similar how we do a lot of diligence on our end, we tell our founders it's equally as important you get to know us. And we tell them for any other subsequent raise, do the same thing. So something that, just trust your gut and look for the right partner and, look for people that can help you. And I think, one of the mistakes I sometimes see founders do is they just look at VCs or investors as money only and not help. And that's a shame, so you always want to look for an investor with a lens of how can they help me? Are they supportive? Like, you want people around you that are just making you better. You learn from that, help you grow. And that applies to all things, right? And building your team and everything. So just trust your gut, find the right people. And not all money is created equal. That's what I'd say probably every day.
Yeah, that's a great, maybe we'll leave it with that, but yeah, not all money is created equal. Yeah, for sure. Julie, thank you so much for joining us. Thank you for making the time. It's great to have you with us this morning, and I hope we'll get to see you soon in person when you get the chance to.
Yeah.
Yeah,
I'm overdue to get up there, but thank you for having me today. Appreciate it.
great to see you.
too.
Julie, Alexi, thank you so much for being with us this morning. Really appreciate the time and the great tips and that you were able to share with the audience. And I'm going to leave everyone with a couple of upcoming events. QuickBooks. Who doesn't love QuickBooks? August 31st. Let's dig in. No, QuickBooks is awesome. We have a fantastic facilitator, teacher, who is actually very passionate about QuickBooks. So if you need to clean things up, come to the workshop. And AngelCon, I mentioned at the start, we're launching Fund 7. So not only is it open to new investors, we had a wonderful, amazing group of investors last year. A lot of them are reinvesting this year, but we're always looking for more investors to join. It's a great way to network with local people. We meet once a month. We train investors once a month for 6 months, and then we get to do due diligence on startups and kind of like Shark Tank, even better than Shark Tank. Then we get to invest in one startup. But also for the startups in the room and online, keep track of this. We'll soon put a message out to ask for startups to apply to be considered for an investment. So we get, anywhere between 20 to 40 applicant startups every year. So keep that in mind. It's going to be coming end of the year, start of next year. There'll be an application deadline, and you'll see it all over social media. You can ask us, when's the deadline? But please apply to be considered. I think that's it for events. It's a wrap. Thanks again.